afternoon, traders and investors. Welcome to the market update. My name is Kay Kim with the Traders Club. Today is March 17th, 2017, Friday. Market is still open as I publish or record this video. Market should be open another 40 minutes or so, so you'll see some flashing lights. Well, today I'm going to go through every single indices that I watch: Dow Jones, Spider, Russell, Financial, Transport, NASDAQ, and Silver, Gold, and GDX. And then we'll wrap up the video. Obviously, you know, I've been writing articles on, I've been updating you on Citi, Intel, my positions, and also some other things. So I won't talk about it in this video. But let's go to Dow Jones Industrial Average here. Obviously, when you look at diamond here, I would have to, this is a 20 EMA. 20 EMA has been really important moving average really throughout since really July or so, because you can see once we lost that 20 EMA on the Dow, it has been acting as a resistance. As soon as we reclaim that, the stock or the index has not able to get below the 20 EMA, as you can see right here. I mean, it's slightly in that vicinity. We danced around it a little bit, but it gotten right back up here. So that 20 MA has been an important support. And I'll say this, as long as we stay above this 20 MA, the benefit of the Dow goes to buyers. And the question always, you know, I get would be like, well, how long will it continue to respect this 20 MA, Kate? I don't know. Nobody does. All I know is this: as long as it stays above the 20 MA, I'm going to continue to look at this market that it has a potential to move higher. I mean, if we lose 20 MA, obviously we'll talk about it then the 50 MA is a level to watch. Obviously, we're still in an uptrend. We're on higher lows and higher highs, and the trend is your friend, but nobody knows what that means. It means benefit of the Dow goes to the buyers as long as we stay in that fashion. So this is a level to watch. Obviously, going into next week, this is level has been acting as support that coincided with the 208 on the diamond. 208 here, potentially some kind of a bull flag. Tough to say. I really don't like micromanaging this. You know, you guys know that if you've been following me long enough, you guys know that I don't day trade. I don't even swing trade. I'm a position trader. I hold things much longer than most of you guys, unless you're doing much longer term. So really, the couple days, couple weeks of move really doesn't bother me a whole lot. So I just kind of look at this and say, hey, you know what? Let's see if we can able to stay above 20 MA. If not, let's see if that gets retested. But I'll worry about it once we get below that 20 MA. I'll worry about it then. I'm not going to just say that, well, it's extended, therefore it must come down. Well, that theory didn't really work out because people were saying that this was very extended. That we require, we must, we should, it's a due for at least, you know, what, like 8% pullback. How many people you heard that, right? 6%, 8%, right? This was actually only 5%. I think it was like 8% on Spider though. Well, and this is a level that after this kind of move, can it really go any higher, right? Well, it did. It did. It actually moved another 7%. And diamond didn't even have, barely had 1.5% correction. That's not even a correction. That's just a little tiny pullback after this kind of monster move. And we had another move. Can we have another monster move? I don't know for sure. Nobody does. All I'm saying is this: as long as we stay above the 20 MA on these indices, benefit of the Dow goes to buyers. I want to show you these. I want to show you the some of the oscillators that look at. We do have a squeeze on this. Do you see this? This is Bollinger Bands. I don't always show you guys Bollinger Bands, but it's interesting to note that we had these squeezes before. You can see they get squeezed. It means the pressure is getting built because after a bullish move, you're going to see some consolidations. and then you can see the squeeze. So I think there could be, if there's an up move, there could be another run up to the upside. Looking at oscillators here, obviously, stochastic kind of getting back down to this level. We did find support here. Potentially we start to oscillate back and forth. That's kind of what it does in an uptrend. What it does is it kind of starts to oscillate back and forth on the top of its band rather than coming all the way down to the oversold level. Let's go to Spider here. Spider, same thing here. I'll say it again. As long as it stay above the rising 20 MA, it acted support here, acted support all around here and here and here. Benefit of the doubt. And you know what? I'm not just saying this today. I've been saying this since January, December, February, and I said this last week that this is a potential level of support. And again, obviously S&P 500 index is up 0.05%. We did have dividends on Spider, so we're down 0.4%. But we can see that there is much strength. S&P 500 index is only up 0.05%, whereas the Russell is up 0.32%. So and we're starting to see, because the Russell has been that lagger. As you can look at it here, you see it hasn't gone anywhere for the 3 to 4 months here. Really just been moving sideways. We've seen Dow Jones and the Spider and the Nasdaq and the financial sector and the transport just thriving in November and December, January and February. Well, most January, December it consolidated, but I mean November, December, February, it really rallied hard. But the Russell 2000 has been moving sideways, and I think what's going to happen is that money is going to start to rotate. It is difficult to go long on Spider. It is difficult to go long on Nasdaq, on the semis or Dow Jones. But I think the small caps, the lagger, I think the money starts to rotate from these large caps and start to go into the small caps. And I believe the Russell is going to be the leader next several months. I think it's going to look a lot like 2012, 2013. If you look at, you can go back to your chart on the Russell 2000, 2012, 2013. That was when the small caps were leading, and on the streets, that's where everybody was talking about back then, 2012, 2013. Where every Russell, it was always a Russell that always made new highs, and everything else followed. I think that's kind of what we're gonna get into next several months. And again, speaking of the 20 MA, we're back above 20. Things got hectic once we lost at 20 MA, as you can see, but we found support here. And you can see that 20 MA is acting as support last couple of days. We did thrust above 20 MA that Fed minutes after that, and then we are holding above. You can see today we briefly came down, hit that 20 MA, and we're seeing the dip buyers there. I'm still holding full positions that I have accumulated in these levels. And I'm willing to hold several months here, see how it plays out here. Also, the level that I recently on my journal update, I talked about this level. This is an important pivot. It was a resistance prior to, and then became a support here, and then it was resistance, and now back acting as support, which is also coinciding with the 20 MA. So I think the next level of resistance here. But if should the price pull back next week, I think this level is a level to watch. These vicinity here, I think this is vicinity. Should the price pull back? But if price continues higher, probably will get up to 140.05, and we'll talk about it next Friday how that plays out. I think the bank's been struggling here. Now it has filled this gap. We're slightly losing that 20 MA as of today in the banks. Let's remove that. But we've seen this before though. You right there, we did lose 20 MA, but we got right back up here. So let's see how it plays out here. I mean, if I throw a Fibonacci to ascertain potentially next support level right there. So we got that the first level of Fib is right here, 38.2%, and then 50%. I think we'll find some buyers in that vicinity if it continues lower at 24.36. So keep in mind, I do have another 30 minutes in the market. If we do see late day buyers, if we do close with some kind of a hammer, that could change things for next week. But that's the level that I watch. Let's look at transport. Transport has been actually struggling. We are now below 20 MA. 20 MA is acting as resistance. Actually, transport is giving us bearish divergence on the weekly here. That's something to kind of keep an eye on. Actually, if I go like this, on the stochastic and RSI, you can see right there, got a higher high, and then you can see we got a bit of a bearish divergence going on. So that's something to keep an eye on the Russell, or I mean on the transport. Just because transport have a bearish divergence doesn't mean the whole market is going to crash, because when the transport pretty much saw the steep decline, or you want to call it a crash, well, the major market held up. So transport is struggling here. We're below 20 EMA. I think the next level of support will be in that vicinity. Let me actually throw a 50 EMA, see where we're at with the 50. Where'd my 50 go? Right there. So if I throw, we're below 50. Okay, let's see 100. Okay, 100 is right there. So 100 is a level to watch. Keep in mind, we're still in an uptrend. So 100 did act as support in that vicinity here and here. So I assume there's going to be some dip buyers coming in that vicinity. So 100, and that's the level there for Rust or transport. But with the bearish divergence on the weekly, that has to be confirmed. That for that to confirm, this thing breaks below that around 161-ish and then retest. Keep in mind the retest is important, and then gets rejected. Then things can get hectic, because how many times have you seen fake outs or head fakes or traps? It will come down a little bit, fakes everybody out, and then goes right back up. So that kind of stuff happens a lot in a bull market. Exactly happened right there. It goes up, comes down, fakes everybody out, and goes right back up. So that's why in a bull market it is extremely difficult to short. And you know, unless you're very nimble, very short term, it's very, very difficult to short there. Let's go to NASDAQ here. Q's just thriving, right? This thing is moving fast here, and how long can it last? I don't know. Are we overbought? Yes. But it can stay overbought, and it can keep grinding higher. You see, we haven't seen a huge move, but it's been grinding. And then rests a little bit, grinds high. It can keep doing that. Until we see this thing breaking down, I'll say it's this. As long as we stay above 20 MA, benefit of the Dow goes to buyers in the minor term. However, 50 MA did act as strong support back here December 30th. So if this thing does break below, you know what, instead of shorting, if NASDAQ breaks, if NASDAQ starts to come down below 20, instead of shorting that, why do you want to make money just quick? Few scalps here when you can make money to the upside like this, right? I would rather wait for a pullback to 50 MA. If 50 MA gets retested, buy that dip will be probably much better strategy than trying to short this here. And if that doesn't work out, it comes, that comes 100 SMA. I mean, if this thing comes 100 SMA, I'm buying that dip hard. But I think most people are thinking that, so we're probably not gonna get it anytime soon. So I think 20 MA to watch if we lose that 50 MA there. So looking at, I just went through Dow Jones, S&P, Russell, financial sector, transport, and the NASDAQ. Just kind of looking at all of those indices together. Obviously, sentiment is bullish. Transport is breaking down a little bit, but transport is the only one breaking down a little bit. Doesn't mean that it's going to bring everything down. I don't know why people think that. That's what people are saying back here in the in NASDAQ. This was December right here. As you can see, this was when, in November, when all the indices were rallying, and everybody, all these so-called experts were saying, well, the NASDAQ isn't participating. Well, therefore, the whole thing is gonna crash because the NASDAQ is not participating. I mean, seriously though, we have a Dow Jones rallying, we got the transport rallying, we got the spider rallying, we got the financial sector rallying. We got semis rallying, but just because of NASDAQ isn't rallying, the whole thing is going to crash down because of the NASDAQ? Wouldn't it be the opposite, where because all other indices are bullish, that it's going to bring the NASDAQ back up, right? So with that logic, when we look at the transport, would you say that because transport's not even breaking down, we're just we're just kind of consolidating really? As of now, we haven't seen any kind of confirmation of a triple top or double top, people want to call it, because obviously people always want to call things without any kind of confirmation. Because what does it look like? This people are saying this was a head and shoulder formation. But head and shoulder formation on the Nasdaq, they've been miserably wrong the whole time. This is head and shoulder formation. Well, that never played out. This was head and shoulder formation. Not that one, actually. Let's see. Here. This was head and shoulder formation. That never played out. How does a head and shoulder formation supposed to play out? Like this, retest, and boom. That never played out. How many times? This looks like a head and shoulder formation that really didn't play out, and this thing actually just went crazy after that. How many times? I mean, we had a one time that head and shoulder potentially played out, but it was short-lived. I mean, it was only like few points down, and then it just got right back up. You see that? So, and here's head and shoulder formation that never played out. There's another head and shoulder formation, faked, trapped all the bears here, and then got right back up. That's what I'm talking about. When you're dealing with the bull market, all these formation can occur. You need a full confirmation before you can say that that head and shoulder formation is going to play out. So with that logic, when you actually look at the transport, can you tell me because transport is kind of a little bit weak that it's going to bring the whole market down? Can it happen? Yes. And I'm not trying to cover my ass by saying that because anything can happen in the market. Trust me, guys, I have a much more than covering my ass because I have so much money invested in the market. It's just funny how people say that, oh, Kay's just saying that just to cover his ass that anything can happen. It's life. Anything can happen. What I'm saying is this. Probability of that happening is very, very low. Everybody's want to talk about 1987 Black Monday. It only happened one time in 1987 Black Monday. Then about 3 days, whole thing crashed. It doesn't happen. Usually the topping process happens. All the indices starts to form this major topping pattern that could take up to 6 months. It is only 1987 where it just, without a proper topping formation, that thing just tanked in 3 days. Only happened once or twice, 1920, something like that, in history. I don't know why people always want to worry about stuff like that. I always referencing the worst possible scenario. You know why? Because our humane way of fearing the worst. So don't fear the worst. Look at the probability. Transport's not breaking down yet. We have 100 SMA here. It is weak. Doesn't mean that the whole thing is going to crash down. The transport is going to bring all the indices down. If anything, we're probably going to find some support in this 100 SMA. If anything, we're probably going to see it's going to make it look like it's breaking down and then just goes right back up. Again, we're still in an uptrend. It has a high probability of that happening here. So I wouldn't be so happy to short transport. I wouldn't start to assume that the whole thing is going to crash down because of transport's quote-unquote weak. It's not weak. We haven't even begun to retest first level of Fibonacci here. I mean, if I just draw this from that low, this is it's not weak. We're still in an uptrend. We're digesting this gain after this kind of up move. It's totally fine. Quickly, I'll look at gold, silver, and metals, and we'll call it a day. We've been talking about this potential invert head and shoulder. Again, the formation can form, but we need full confirmation. What we need is this thing getting back above the neckline, retesting it, because there could be some head fakes and shenanigan traps, and then continue higher. And in that process, if it continues to create higher lows and higher highs, then I think you got something to work with, bulls. Then I might even think about buying call. I want gold to do well because I want to go long gold, but I don't want to go long unless I see a full confirmation of bottoming pattern because we're still dealing with major bearish resistance here. So things gonna get hectic. We're seeing something here. Gold, obviously, we're also. I've been talking about this. As long as it's below this, benefit of the Dow goes to bears in the primary term, though we've been seeing minor term bulls right here. But if this thing starts to do something like that, then things can ugly. So I wouldn't buy this unless you're short term. I wouldn't want to go long until this thing gap back above at least 124.67. This one doesn't even look like head and shoulder. This thing really needs to get all the way up here and then do that. Then it might look more like a head and shoulder. So gold is looking much weaker there. Let's see, this is a current resistance here. Let's see if that level can you can have to break above that. If not, things could get ugly here. One last, miners, gold miners. It does have a formation of a textbook inverted head and shoulders. We've got neckline here, left shoulder, head, and we've got a leaning right shoulder, which I talked about last week, that we could have a leaning right shoulder. This thing still needs to confirm this head and shoulder weakening, meaning it would have to come back up above 25.51. But you know what though? We still have this primary term downtrend resistance. So what we have to do, what the buyers have to do, not only it has to get above 25.50, or not only it has to get above this resistance, you would have to get above this horizontal neckline, 25.51, and then it's gonna hit that primary downtrend resistance again. Don't be too precise with that. It's gonna be the vicinity of 28.69, and you'd have to get above it, and it's gonna pull back. The problem is when it pulls back, is that gonna be a higher low and then get up, or is it gonna just plunge and through? You know what I'm saying? So still a lot of level to cover. I wouldn't want to go long on GDX until this thing gets above 28.69. Then I may think about going long here above the primary term downtrend resistance. That's it for me tonight. Have a great weekend. Good luck trading next week.